Now moving on, in fact, talking about the PNB Housing Finance, and as far as the result from the PNB Housing Finance is concerned, well, it was quite a decent quarter. If you look at the top line, there's a net interest income. Well, that registered a growth of 10% on a year-on-year basis. The profit too jumped up to a similar extent with 11% kind of gains coming in there. But there were some sort of concerns around the disbursement. So let's, in fact, welcome Sanjaya Gupta, MD, PNB Housing Finance, to discuss their Q1, in fact, the kind of show that they put up and the kind of trajectory on various parameters that they expect going forward. Welcome to the show, sir. And first up, let me begin by asking you that it has been a decent quarter, at least when you look at the headline numbers, that is a bottom line, and the net interest income, with both of them, in fact, registering growth in excess of 10%. What really worked well for you this quarter, and have you managed to meet your internal expectations as far as the first quarter is concerned?
Well, certainly, Abhishek, the results have met our expectations, and the reason for that was that right from Q3 of the previous year, we had been voicing our concerns internally about the macroeconomic scenario, and I think we were pretty accurate in predicting what will happen, and hence we sort of have had a very huge focus on our retail growth. And you should remember that out of 104 branches that we have, 50 are brand new branches. When I say that, they are less than 18 months old, and they are now maturing and coming to an optimum level of utilization, and hence we are able to show a very healthy sort of growth on our retail disbursements, on our retail portfolio, and the quality of our retail portfolio is holding strong. And we are pretty confident that going forward on the corporate finance side, we will be honoring our past commitments of partly disbursed cases, and the projects are getting monitored regularly on a weekly basis when it comes to stage of construction, sales velocity, collection efficiencies, adherence to the RERA regulation and the local laws. And I think that strategy has worked very well, and hence, even though there has been a little bit of degrowth of about 22% quarter on quarter on disbursements, but our retail disbursements grew by about 7%, though our corporate finance disbursement by design degrew by about 82%. So we are a happy lot. Our strategies are working. Our execution is proving to be right, and we will continue to monitor our plans very, I would say, deeply and with a deep focus, and I think we will coast through this financial year pretty successly.
All right, Mr. Gupta, strategies are working and execution is also, you're quite satisfied with the execution. Now, you just mentioned about the way you are betting big on the retail space. Now, rationale, if you could help us with the rationale behind your shift of strategy towards retail. What is it that is driving you towards the space?
Well, the thing is, there has been a lot of concern on delivery by the developers. So we are just concentrating on category A and B developers in the major 8 cities where we have developer finance exposures. And as I said, we are honoring all our commitments with these developers, about 167 of them who are on our portfolio, and we are not shy of it. We are partnering them. Now, when it comes on to the retail, certainly mass housing is of very great significance, and that is housing for all. And we have had a major shift in our distribution, where our channel, which used to be on third-party roles, last year has moved on to a subsidiary role, which is a 100% owned subsidiary, and that is giving us a wonderful sort of connect with our feet on street salespeople, and they are doing a fantastic job when it is coming to retail housing loans, retail LAP loans, and that is why I'm pretty confident that with 50 branches coming to an optimal stage of utilization, our in-house channel moving to a 100% owned subsidiary PHFL, that our retail focus will really take us ahead in this environment of weak consumer sentiment.
All right. So retail focus will take you ahead in this muted environment that we are operating in. That's a word that we're getting for you. But one key aspect that doesn't really show a very great picture as far as the Q1 performance goes, and we're talking about the disbursement, which you briefly touched upon, which registered a fall of 22% on a year-on-year basis. How do you see that panning out going forward? Obviously, in the backdrop of the kind of environment that we are sort of currently in?
Well, I think the quarter one is quite a indicator of what things are going to look like, and I think obviously the festive season will have an upside. Every year it has, which is quarter three and quarter four, and it contains or it forward flows into quarter four. So I think going on quarter to quarter, things are going to improve, and the sentiment will also improve. It's not going to be like this forever, and because the economic cycles the frequency of the cycle movement has certainly become shorter, and I'm very sure that even the monsoons are going to be normal and the kharif crop will be successful, and the rural consumption will be better, and the consumer sentiment will be better, and consumption will come back by the time we are into the Dussehra or the Diwali time.
All right. Now talking of the kind of asset quality that panned out for you in both the housing and non-housing segments that you operate in, if you could give us a sense of how the key parameters actually panned out on the asset quality front.
Okay, so I would first segment it between corporate and retail. So on the corporate side, even in our annual earnings call, we said that there are 2 NPA accounts worth about 30 crores and there are 5 stretched accounts. Now out of those 5 stretched accounts, by design we made one forward flow into an NPA so that we can bring the promoters on the table for an early resolution by end of quarter 3 or beginning of quarter 4. So that actually gave the bump in the gross NPA. On the retail side, both in housing and in non-housing, every year in quarter 1 we see a forward flow of about 20-25 basis points, whether it is housing loan or non-housing loans, because to get into SARFAESI we have to have a 90 plus DPD or stage 3. So that is by design, because in the SARFAESI resolution of the curing time is about 6 to 7 months, and that's by design, that if you let the forward flows happen in quarter 1, by the time you get into the quarter 3 and quarter 3 end, you start seeing resolutions, and then you champion your NPA figures by the end of quarter 4. That's by design, and that's because of the law. And let me tell you that the SARFAESI law is very, very congenial, impactful and effective. So the forward flows in the retail is not a concern to me.
Okay, forward flow in the retail is not a concern. Now talking of the average cost of borrowing, well, this particular element in fact went up by as much as 58 basis points in Q1 when compared on a year-on-year basis. How do you see the cost of borrowing pan out for you, going forward? Do you see some pressure to sort of continue on this front?
See, I think with infusion of our capital of about 2,000 crores, the way other lenders are going to look at us is going to be, and the rating agencies is going to be much kinder. So I think, the steady state cost of funds are going to remain quite stable. Obviously, the corporate bond market is not conducive to HFCs and NBFCs right away. So we are also not too gung-ho going forward on that source of funding. But yes, bank lines, ECBs or retail deposits, NHB refinance, they are going to be the major sources of funding. And we have been pretty successful in raising upward of about 11,000 crores in quarter 1. And I'm sure that even in quarter 2 and quarter 3, we will be able to do that. Plus, our ALM gaps have improved over the last 1 year because of our, long-term borrowings. Plus, securitization is coming in very handy. We securitized a pool in quarter 1 of about 2,300 crores. And I think we are going to repeat the same sort of an amount of portfolio in quarter 2, and especially this time we are concentrating our efforts on individual LAP loans to be securitized. We have 4 or 5 banks which are doing due diligence on our LAP portfolio, because that is also performing very well. And here I would like to add that we have about 12,000 crores of securitized book in the market with so many lenders, and that is about 40 months vintage, and that has only 0.22% gross NPA. So people really look at PNB Housing when they look at to buy portfolios, and we have very good servicing standards, very predictable turnaround times. So I think the robustness of the organization is really going to come in handy in these testing times.
All right, robustness of the organization will come in handy in these testing times. One final question before we let you go, Mr. Gupta. You recently raised $100 million from IFC to finance your affordable housing. Now, if you could help us understand your fundraising plans that you've chalked out for the rest of FY20.
Yeah, so ECB always, we do annually. And last year also we had done a smart, I think, $450 million mobilization. This year we are planning north of about $550 million. I cannot give you names of the banks, but we already have lined up about 4 or 5 of them. And IFC was the beginning. They always like to front end, and this is a repeat relationship with us, the 4th or the 5th. And so now, the others will also follow. So ECB is also going to be of significant importance to us when it comes to raising resources.
All right, Mr. Gupta, well, thank you on that note. Thank you for sharing the details of your performance in Q1. In fact, the stock is in fact not really taking it in stride. 2.5% kind of pressure you're seeing on a PNB Housing Finance, and the clear concern on the kind of disbursement trends that have panned out, and also elevated asset quality parameters that have emerged out of Q1 for a PNB Housing Finance, and that is clearly playing out on the stock as we speak. Now, moving on from a PNB Housing Finance to the markets at large, as a bear grip tightens on markets and Nifty hovers around the 11